Hi everyone. Hi. Good evening from Singapore. Good morning, good afternoon, good evening, wherever you are. Welcome to the webinars. Um, okay, I am slightly late for like 3 minutes. Okay. Maybe let's just start. I will start at like 2 minutes later. Let everyone to tune in. I will start the section later. Okay, so today I'm going to talk about smart money concept. If you have any question, you can leave your question at the chat box. Okay. Um. Okay. Let's just wait for 1 to 2 minutes for everyone to tune in. Okay. Let's just bring it here. Okay, let's just start with section for today. Again, guys, welcome everyone. So today topic, I'm going to talk about smart money concept. Again, if you have any question, you can just leave the question at the chat box. All right. Okay, let's just start our section today. If I finish early, I will bring you guys to the chat and see if there is any trade setup for today. Okay. Just sorry guys. Maybe let me just change the disclaimer. My apologies. I think I did not change the um the disclaimer. Just give me a minute. Okay. Just a quick one. Give me like 30 seconds. Okay. It's like okay. Okay, so disclaimer, as usual guys, remember that everything in this video is educational in nature. Okay, nothing should be construed as investment or trading advice. If you guys want to trade, please do your own due diligence before you guys trade. Okay, I just want to highlight over here risk warning. Trading forex and CFD carry a high level of risk to your capital, and you should only trade with the money that you can afford to lose. Okay, and it may not suitable for all investor right here, so please come to join the webinars. Okay, and introducing your host today, my name is Peggy. I'm an investment analyst and then a prop trader as well. I think you see that it's a IC funded. Okay, it's a prop firm, you may check it out. Okay, IC funded. I'm currently taking the challenge as well. I'll show you guys over here. Okay, you may just Google and test it out. All right. So today, the agenda for today, I'm going to talk about what is smart money concept or SMC. Okay, what are order blocks and what are breaker blocks and what are fair value gap and how do you trade using smart money concept. Okay. Let me see. Okay, so what is smart money concept? So basically smart money concept or the trader called SMC. Okay, a trading strategy that focus on identifying and following the action of institution investor. Okay, is analyzing the large volume transaction and market data to anticipate price movement. And the first one is the key element including order flow analysis. Okay, understanding the market context and analyzing sentiment. Okay, and we use SMC just to follow the big boy in the market. So basically, okay, I will show you in the chart later, so don't worry. Okay, so now talking about what are order block. Okay, These are the charts I think I took for this pair. Is either EURUSD, I think, to be GBP/USD. Okay, so basically the order block are specific price zone where either you buy or you sell order have been historically positioned by major market player. So basically the order block here actually is the demand and supply, or support and resistance. Okay, basically. Oh, here I'll show you. Where is it? Right here. Okay, it look like it in the chart. Okay, open for you to see. Where is my my chart just now? Hang on guys. Okay, over here. Okay, when you look for order block, okay, actually it's just a demand and supply. Okay, you have to look at here. I just remove. Okay, for example, just give me 1 second. Okay, my apologies guys, because I think I had a call over here. Okay, oh, right here. Basically, order block is a demand and supply. Okay, let me remove over here. You have to look at the GBP/USD. Okay, this is the order block here. And actually is what this area is a supply demand zone, right? If you go to look for order block here, this is your order block. Okay, let me slightly draw for you over here. Okay, this is your order block. Okay, and this is another this one, not use it. I try really, it's not gonna work out. Okay, let me find for you. So here anyone, okay, this is still valid because price tap in the zone here. So this is our resistance level, basically, or supply zone. Okay, but NMC they just call order block here. Order block, if you see order block, okay, either support or resistance here, you will see that this is the used to be resistance level or supply zone right here. And then you can see that this is really big bearish candle, so you can draw your order block here, meaning that if the price come down here, tap here, you're gonna sell. Okay, this is your core order block. Okay, and now moving to breaker block here. So basically the breaker blocks is an area on the price chart where the market had made significant move to break through a previous support or resistance level, but then retest back to the level. So over here, you were to look, don't worry, I'll bring you guys to the charts later. For example, like here, price, oh, okay, okay, they make a higher high, higher low, higher high, higher low, higher high, higher low, right here. And here they make a chain of character. Okay, and here is our, over here is our order block, right? Supposedly price come here, supposed to come here and reverse, right? But they break through. Okay, now they break through. We wait for price to pull back to the zone. Basically, this used to be our support level, break. So now it become resistance, and then you short like that. Okay, it's like here. Okay, this one is a good example. This is go chart. Okay, it look like this. Here, let's go to go. Right here. Okay. Where I get that price. let me try to get for you. It's a long week. I remember it's a long week. Maybe I just get into, let me see again. I forgot where I get this one, but I know this is a go. And then price pull back to the level. over here. Okay. Okay, maybe this one. Just an example. Okay. Basically, so if you were to look, where is the one I get? Give me like 1 minute. Okay, here. No. Head 4. I remember it's head 4 time frame. Maybe. Oh, it's over here. Just for example, okay. I forgot already where I get this one from, but here. Sorry, like right here. Okay. Is here. So basically, like you can know that price is mega higher high, higher low, higher high, higher low, higher high, higher low here. Okay, then mega higher high, higher low, higher high, and higher high, and they make a lower low. Basically, this one is our order block here, right? This is our order block here. What do you see? Okay, I remove this one. Okay, you see here, this is our order block, meaning that when price come from here, okay, up to there, come to this our order block, right? We're gonna buy up. But then what you can see, they break through. Okay, they break through the order block. From this support level, it's become resistance, right? And then they make what? They make chain of character over here. Okay, this is your chain of character. Okay, and if you want to mark out your break of structure or BOS, is this your break of structures. Okay, basically price make a higher high, higher low, higher high, higher low, higher high, and this is your break of structures. They make a new high. So basically, okay, you can mark out, okay, like that. Oh, okay, like that. Okay, and I just basically it's like that. Okay, and this one is, if you want to like label out, okay, this is your high, right? And this one also your the wick, jump up here. This one also your high, and then this is your higher low here, right? Higher low, you know, mark out. Okay, and then this is your higher low, and if you want to mark out, just for example, okay, high, okay, and then assuming for you to see, like over here, they could not make a higher high, right? Instead, okay, I'll see this higher high. It price you on uptrend. Basically, it price you on uptrend. From here, higher high, they need to come up to maybe here, make a higher low, and continue higher high, higher low, like that, right? But now price, they break through this previous low, which is this one. Okay, so you mark out chain of character here. So now this is called a breaker block because this one break the order block here. We wait for price break, pull back, and then continue to downtrend now, right? So now from uptrend, they are changing chain of character from uptrend to downtrend. Basically, you trade SMC, right? If you were to look at market structure, you need to wait for price to break the previous low here. Okay, and then you can see the price pull back. You gonna short from this level here, right? This is very good example. And then you short here, this is a goal on head 4. Okay, and then you can see how many it's good reward seen from here to either here. Okay, it's about 650 pip or 6,500 point basically. Okay, from here to here. Okay, this is how you trade by using SMC, or this is called breaker block. Okay, any questions so far, guys? Any questions so far? Okay, now fair value gap. Okay, fair value gap, so basically we already know that it refers to the in the trading and financial analysis. Okay, price areas on a chart where the market had moved quickly through without much trading happening. So there is a gap. So basically there is a gap, okay, between first and the third candle, which is the wick. Okay, so basically meaning like here is our, like for example, support level, and then you can see this is imbalance, right? Suddenly it's either like big institution or the big boy in the market, they just buy boom here. There will be some leftover like matching order over here. So basically the fabric gap here for price will pull back to take out the remaining orders. Okay, over here. So basically what is mean by that, I will just show you guys. For example, and again, if you trade by using fabric gap, that might have the wick, the first wick and the third wick is not touching each other, right? If you were to mark out, this one is also my fabric gap. Okay, why? You can see that the wick here, the second candle come, and the third candle, and you can see here's like you can see that no the candle in this area, right? So this come in, okay, still come down. I believe that's still the remaining order right here. There's like price come again and then falling. So basically on top of this is still the remaining order. Okay, and another example, if you want to like mark out the fabric gap, let me see. I try another for okay, the question is for breaker block, is this content that the block will always be retraced? Yes. So basically actually it's a breaker block is the form of like other block is breakthrough, like just now for example here. For example here, right, if you were to look here, maybe I find another pair. Okay, like the breaker block meaning like, you know, price is changing the direction. So basically like I try to find a good another example. Just hang on. Maybe over here, like let me see. Okay, this one also consider the order block. Okay, here. Okay, this is an order block. You can see that here, right? Order block is also supply zone, right? You can see that you mark out order block, you will see that price is from like, you know, downtrend. Okay, and then you can see there is very strong bullish candle. Then you mark out the zone. Okay, you mark out here. So basically it's our demand zone or our support level. Actually the same meaning. Okay, for SMC they don't call support. They think that like, you know, old style, they call demand. So you can see that price come to the order block and then continue to uptrend. I mean continue to uptrend here. Okay, the breaker block, let me find, I try to find for you. Maybe here. Okay, maybe here. This is before that is our order block, right? I just do like that. Okay, this is our order block. Price haven't come, meaning that when price come, like maybe come here, or they come, maybe come to the zone here, you're gonna buy up, right? This is our order block. Okay, what you see excuse me. Okay, okay, I stop here. Now they break through. Either you mark out here, this is may not be a good example, but if you know that they break this low here, so basically from this one excuse me, from this one, this is basically is also our support level right here. Before that, this one used to be resistance, right? Pull back, it becomes support, and price come again, we're gonna buy up. So now they break through the level. okay, from order block is breakthrough. We will wait for price to pull back to the zone or retrace, and then you're gonna short. You can see that. Now I'll stop here. If you're gonna short here, price come to the just slightly from here, a little bit here, and then it go up here, you might get stop out. These are not a good example. Okay. The price have to be on uptrend. Let me see. Okay, here is good example. Another example here. For example, you can see their price on uptrend. They make a higher high, higher low, higher high, higher low, higher high, higher low here, right? And maybe you mark out this is your order block here. Usually when I look for my order block, there might be small candle before the very imbalance here. Okay, this is not a good example. Okay, not every time we trade only based on order block. Okay, but this is called order block here. So meaning, let's say price come break, I will mark out this one. They might like break of my chain of character. Okay, here, meaning that if price come to the zone here, I'm not gonna short from this level. Okay, from this level, this one may not be a good example because okay, this is the like a sideways, right? If you were to put here, this is not a sideways. But again, to me, if price going to make an uptrend, but so basically like if they want to like continue to uptrend, for example, okay, like that, they cannot break the previous low here. Either they could come only here and continue to make a higher high and higher low, a higher high, higher low, higher high, right? But in this chart, what you can see that they break this previous low here. So I mark out, okay, there might be chain of character here, so I will find opportunity to trade right here. But again, in a real life, not every chart will be look very like perfect like this or like breakable like this, right? Over here, the trick is you want to trade over here. Let's say price break, okay, this level, okay, you use Fibonacci, you pull from this swing high to the swing low here. Okay, basically if you want to trade, this is the area that you might want to wait for price to retrace a little bit higher, which is we do have 50% Fibonacci level should be somewhere around here, for example here. Okay, we like if you can wait, sometimes price break here, like breakthrough, you wait, come here and then continue to downtrend. But then if you wait there, okay, price may not reach and then you may miss the entry. But if you pull here, you might miss the entry like all along here. Because this one we cannot see, like if you in a real life you cannot see like the chart. This is price rate happens, so we can see that. But usually I will wait for price to retrace a little bit higher, between 78.6 to 50%, and I'm gonna chart from there. Okay, but in this case you might miss the entry here. Okay, okay, what is the easier way to identify order block? This is an easy one, guys. Order block only at support and resistance. Same, it also demand and supply. For example, this is your supply zone, right? Also what your resistance level. Zoom in for you to see. Price is a bullish. Okay, now they have the bearish engulfing candle. So actually if you see bearish engulfing candle or bullish engulfing candle, that is called your order block. Okay, this is what bearish engulfing candle, right? You can see that. That's why price is falling. And then you mark out, this is your zone, meaning price will come to this zone. You mark out like that. Okay, or this is another let me see. Okay, this is also your order block here. You can mark like that, and this is also another your order block here. and this one also your order block, which is your, this is your what, this is your support level, which is used to be your somewhere here, over here, okay, it used to be your resistance level, right? Pull back, it's become support. That's why your support level here, you can see that is a bullish engulfing candle, so you mark out here your order block here. Okay, the EU is rising, okay, GU also rising. For the this is, I will still identify my order block, okay, here. Okay, and breaker block, I already told you guys, and fair value gap, this one could be your fair value gap. No, this is not the good one. Let's look at gold. Okay, I haven't seen. Okay, it could be, okay, maybe here the wick and the third candle, okay, here to here, these are your fair value gap. Okay, I zoom for you guys to see here. Okay, this is the wick, the first candle, second candle, and the third candle. Look at the wick, meaning that this within the box here, there will be remaining order that had to be taken out here. That's why when you can see that price came in and continue to uptrend. Okay, and this one you may identify your fair value gap here. Okay, like that. Another example. Okay, because now you can go to lower time frame as well. Okay, let me just explore to M30. Okay, M30 you can see very clear, you can see that, right? And I try to find another example. This is, to me, I also identify, it may not very nice, but this is somewhere here. This not okay, this is not okay. I'm not gonna take that. Okay, here. These are no wick, but this is my order here. This is here. My fair value gap right here. But again, when we trade, we not only trade only based on fair value gap, right? There might be what? There might be some any confluence over here. Either if I want to wait for M30, there might have, that should be 61.5% to make it really strong zone. Okay, and then I might put here, there may have what? There might be an extension, or maybe not enough, not good enough. But I will see is there any level above here. So no. So now to support my this level in M30, okay, this is my resistance level, like this is my, I identify this my resistance level, okay, and there is also 61.8% Fibonacci retracement, and there is a fair value gap right here. So basically I will wait here if price go up, but what if you go to the, you see, if you go to the higher time frame, this is your supply zone, right? This is your supply zone. So basically for gold, okay, you wait for price to come to this zone and then you short. Okay, because just now, you know why here? Why here? Because if you know how to identify, this is your supply zone, right? That's why this candle, when price come to the supply zone, top break top right here, price came all the way down. Okay, now it go up again. So now the next target, we wait for price to go up to fair value gap here, also like supply zone, also resistance level M30. Okay, we do have 61.8 here as well. We're gonna short from here, from this level. Okay, I'm still waiting at this level. If price come about 23.60, okay, like tonight, okay, here, and my buy my buy limit still about 23.30 or 2330. It's gonna be my buy limit or buy entry with my pending buy here. I think I wait here for quite some time already, but price did not come. Okay, so let's see tonight price will come to this zone here. Okay, we're gonna short from this level. Okay, this is another order block. Okay, yeah, this is your order block here. Okay, when you draw the order block, right, you draw from the body. If at supply zone, you draw from the body to the wick. Okay, but if demand zone, okay, you draw from the wick. Some people they will draw from a wick, but that one if I will gap. Okay, if I want to draw here, I will get from here. Okay, the wick to the body. Okay, the wick to the body. Okay. And this is the one. You can see this, the wick. This is the body here. Okay, here. And then you will ask me like where to find which one is a valid order block, right? Basically the order block is viewed as supply or demand. So basically this one like maybe H4, maybe can I look for daily? Maybe H1. Okay, you go to H1, you will see it very clearly order block. If you go to H4, you will know that this is your order block, right? Here your order block. You go to H1, it's very clearly you know that this is used to be your resistance level, right? This is your resistance level. Pull back, it's become your support. In H4, in H1, you will look really clearly this is your support level here, somewhere around here. Okay, and then you draw. Okay, your support level, and H4 is your order block. Where is it? This. Right, this is your order block, right? Zoom in. Okay. Here. Right, you're here. Bullet engulfing candle and price pull back is overlap support, and then continue uptrend. Now we wait for price to tap to the zone here. One time come, another second one come, and then continue to uptrend. Okay. Can you turn on GBP, JPY? Okay, now let's just look at this pair by using, okay, if you want to trade by using SMC, okay, you need to look at market structures first. For example, maybe from here, this is not really good example, but okay, now in M15 price is mega high low, right? What I can see now, they break, this is, I think they break this one chain of character here, I believe. Okay, now we're gonna wait for price to come to this zone. You're gonna short, right? I will pull back my Fibo. My sell zone is gonna be this one. I might add 50%. Okay, so my sell zone here, your sell zone is gonna be this level. Maybe shall we wait? Okay, since we are already using this one. Same character. Let's see. You see price will come to this one, so they break above 50, so we're not gonna put the 50 inside. Okay, so this is our zone here. You're gonna say only up to the wick there, doesn't matter, and then you wait. Okay, because this is our resistance level, right? Used to be the resistance, pull back, break above, pull back, support, break below, become resistance again. Okay, but of course they're not gonna trade by using support and resistance. So now we wait for price to come to this zone. Okay, for the GBP/JPY. Okay, let's just wait. Okay, the M15 go to the lower M15. This is our head 4, which is our what? Order block. Here, if you just mark order block is here, right here, order block. It might cut up to here, to the wick here. Okay, this head 4, right? Head 4, I go to M15 because I want to find the sharp entry. I want to know where can I go to the entry. So this is the zone here, somewhere around here. You can see any rejection? Not just right. It's still wait. Do you see? Come down, pull back a little bit. Just wait because there is no confirmation. We just retrace a little bit here. I still wait for price to come to around this area. Okay. This M5, M15. Okay, you have to wait for price to come to this one, to this area. Okay, the yellow one is the order block in H4, and then we zoom in to M15. We want to get like sharp entry somewhere around here. Okay, retrace already. Do you have any order here for the GBP/JPY? Okay. It's my retrace here. Any pair you want me to look? So basically, SMC, right? We trade the same direction with the big boy, right? Basically, of course, you need to look for market structure. Price make a higher high, higher low, higher high, higher low, higher high, higher low, okay, higher high, and then they break the previous row here, right? And you mark out this is your chain of character. Okay, this is your high high. This is your higher low. Okay, they break the low here. Okay, and of course it's gonna look like that. Yeah, and over here they will call BOS or break of structures. Break of structures because they make a higher high, higher low, right? It look like that. Okay, I mark out for you here. Okay, now here supposed to be our order block. Do we have an order block here? OB. I will put OB, okay, order block here. Inside center. Okay, this is our order block here. Okay, so basically, usually price will come into the order block and won't continue the uptrend, right? But they break through here, order block. Basically, it's now become breaker block, right? Breaker block here, pull back here, falling like that. Okay, and over here, it's like that. So basically, for SMC, either here, if let's say if price pull here, okay, you sell. But sometime, okay, but sometime here might have the fair value gap. if you see there is fair value gap here, if you want to make it very strong zone, this is your swing high and your swing low, right? You pull Fibo from your swing high to swing low. The fair value gap, if it line up with 61.8 or 78.6, you are going to wait, or maybe another zone here. For example, you short here. For example, you short here. Okay, they might falling. Okay, but sometimes it might break above here to fill in the gap, and then like that go up. Might continue here and then falling. So say if you have one order here, if then you see that okay, there is another fair value gap here, you're gonna wait another, you're going to have another order up here. Okay, okay, BTC. Okay, let's look at BTC. Okay, why is BTC here? What's going on with BTC? BTC is already on downtrend, right? If you were to look at daily time frame, they cannot make a higher high. Okay, for example, over here, what I can see, daily, you mark out, this is a support, this is a resistance level here. Okay, for example, now it's the order block here. Here, your order block here. Okay, zoom. Here your order block, right? Why your order block here? Because it's your somewhere is your resistance level as well. Here, you can see that your buried order block here. You can see that this is very one candle in head 4. Okay, price will go up here and continue falling, and if you're to move here, this is your bullet order block here. Okay, let's go to the lower time frame. I like to go to M15. Okay, my M15, what I can see here, my M15, you're gonna zoom my M15. I will move here to my I'm gonna wait here my order block in M15. I'm gonna wait here to buy. Here. Oh, I did not put this is my order block. Okay, you can see that why I put here because this is like my support or demand zone, and then you can see that this is your bullish engulfing candle. Okay, so basically you will wait for price to come here, and then you're gonna buy from here. Okay, let's go to M30. Here, how M30 look like, right? Wait here. Because SMC they're not gonna like, you know, this is a resistance, you know, retail trader here, right? Pull back, buy up a bit and continue to come down, because in the daily time frame you need to find opportunity to short, because in daily time frame price make a lower high, and you can either use the trend line just to see only. Okay, like that. Now we are wait at this level. You can wait here, but to me I like to go like slightly below. Okay, because it seems like you can see there is very big I mean there is our late candle here. So you want to like buy up, you must wait slightly below, which is here. I'm waiting right here. Okay, I'm not gonna buy now, I'm gonna buy here, which is around like this price, like this one. Okay, what I can see in the let me see. Yeah, so just buy below. Okay, let's say you buy here, where is your TP? If you buy here, where is gonna be your TP? You're waiting to like buy from here. Your TP, okay, at least 1 to 1, but my TP is gonna be somewhere because I don't trade BTC, so I'm not sure like how to, you know, how to calculate the pip for the BTC, to be honest. Buy from here, at least I saw they might have like the gap somewhere around here. So basically, if I buy up, this might be my TP, and then I will continue to short from this level. Okay, I'm gonna wait for a short because BTC is already falling. This is M15. I'm gonna short somewhere around here, around this block here. Okay. Okay, I don't have an order on GBP JPY. I just need the insight on how to draw the order block on that pair. Okay. Let's just go one more for the pair. They haven't yet, so have to be patient. Some people or some trader, okay, they see like trade a little bit, they, you know, you see they might already have like the short entry, like, you know, short entry here, but to me I'm still wait for price to slightly go into the zone and then you short. You see, like just now, right, when you see that the price come here and then you faster short, which is there is no confirmation for you, it's just a slightly retracement or rejection over here, and then after that another 5 candle still go up here. Okay, so this is still, there's no red candle, so you need to wait. Let's say if this one got rejection and this candle they have the red candle with the rejection, the next candle you can short, right? But this is right, you just can see the blue or green, right? So meaning haven't yet. In a retail trader, they might have the entry over here. Okay, but you have to be patient. Okay, patient is the key, right? You have to wait. Let's say M5 close with the rejection and close with the red candle. You might have to wait another one, or you can maybe put a smaller lot over here. But to me, I'm still waiting for price to come to the zone. Okay, you can see that no, nothing for me, no confirmation. Okay, what is M1? Now I'm look at M1. Why can't M1 here? Not yet. Okay, some aggressive trader, they might have the sell entry right here about this one. Okay, sometimes I might do that as well if I go to M1 and read the candle, but now just be patient. Just wait for this candle to close with the rejection and red candle. Okay, I think you can short. Short small, you may consider the short now with the smaller lot size and wait for another somewhere here. Okay, M15 look not bad. M5 not bad here. Even M1 also look good. Okay, you may consider and just manage your lot size. All right, any pair you want me to have a look for you? Okay, you see. You can see that I should short, right? Because I asked you guys to short, I should short as well, right? But of course you just have to put like very small lot size. Okay, right, I already placed the short. Of course my my lot size very small because I'm still waiting for the zone. Okay, any pair you want me to have a look for you guys? Okay, let's see. Okay, if not, here is the zone. Okay, here is the zone. If they pull here, I just did for my scalping. Okay, I already blew. Okay, let's see. Okay, whether it will come down here. Any pair you guys want me have a look for you, or maybe be look for another pair by using SMC. Okay, okay, for the SMC there will be another one is liquidity. Okay, let me tap on the liquidity a little bit. Okay, here another one is that, you know, like this is supply zone, right? This is supply zone. You can see that. So price zone is easy for you to see, like drop, red, drop here, like you know, this is a red, blue, red. So meaning that this is gonna be another price come in to the zone and come, but here they miss the entry. Okay, another supply zone here, and this is order block, also same. Order block or supply zone, same meaning, guys. Okay, you can see that. And mitigation. So basically the mitigation is that price make impulse. Okay, the market impulses and then retreat back to the order block to fill the remaining buy order, which is the order block, right? Just now I just mentioned, and then pull back. Okay, then pull back. From here they pull back order. Where is my order block here? This is like, you know, here. Order block where here. This is this is liquidity. Okay, like over here, if you have to look at the chart, right, you will see that this is what they think this is equal high. Okay, this is equal high. Usually equal high, the big boy, the market will clear all the stop loss here and then continue to uptrend, because our little trader, right, we study, you know, like, you know, chart like, you know, chart pattern or any like other like trend line, right? Over here in pattern, right, will clear the like liquidity here and then continue uptrend. Because what? Because price make high high, higher low, high high, higher low. Okay, on the bigger time frame, price still on uptrend, but over here the little trader will say that, okay, it seems like they make a in pattern, right? That's why from here they sell here. Okay, in the smaller time frame, you see in pattern, you sell here. Okay, then you might wait for price to pull back to the neckline, right? Here pull back here, like from here pull back, you're gonna short, but then after that you see what in the bigger picture, this make a higher high, higher high and higher low, then price go up to make a equal high and then continue to uptrend to, in the bigger picture, higher high, higher low, higher high, higher low here, right? So this is a small small little trader right here. Okay. Any question, guys? Let me see the I pause here for a while just in case you guys want to ask me. Okay. Okay, now let's move it to liquidity. Okay, example of liquidity. Okay, liquidity is equal to money, right? That's why why is equal to money? Because if no, I mean, like if the little trader win all the money, then how is the forex market, right? For example, the liquidity is equal to money. For example, because the little trading or little trader thought to buy from the support, sell from the resistance. So basically this is the equal high, which is this M pattern. Because usually M pattern here, right, we wait for price to pull back at the neckline. Usually, but sometimes you can get stop out here, then continue to uptrend, right? Just now liquidity, so this equal high as well, equal high, right? Equal high and equal high. So all these is chart pattern, right? That's why you will get sometimes we trade by using chart pattern, why you get stop out, because that is liquidity for the smart money. Okay. Let me see if you have any question. Any question here? If not, let's just look at the chart. Okay, here another example. Liquidity trend line. Trend line liquidity, right? This is in the smaller picture here. If you were to look at the bigger picture, price make a break of structure here, and then you can see that the trend line here, usually the trend line over here, or even like somewhere around here, right? You can see this equal high. The trend line price come, like price come here, you buy. Price come to the trend line, you buy, right? But below here, there is the order block of fair value gap here. Okay, if you don't know that, price will come, break the trend line. Okay, they break the trend line. Okay, break the trend line here, right? Come to the fair value gap here or order block here. price will come, you're waiting to sell, right? Because they break the trend line, then you're waiting to sell here, and then after that you go up all the way, get stop out. This is money, okay, liquidity. Okay, let's look at the example. Maybe look for one, you can see that this pull back a little bit, just sound like blue bull, right? Like green, now it become red. Okay, I still hold because my lot size very small. Okay, maybe we look for one more example. What about the EU? In general, do JPY and USD counter trend by this? I mean that when USD high, JPY usually that could be positive correlation with DXY. Okay, DXY, you can look at DXY right now. DXY is falling. USD same shape, USD JPY should be falling as well. Look at, you can see there is a positive correlation, but not every time, because the user sometimes you might see the bank intervene the market, right? So it's very hard to say. But sometimes they might have positive correlation with the dollar index. And that dollar index is falling. Negative correlation with dollar index is EU. That's why EU is rising. GU also rising. Gold also rising. Okay, but now gold somewhere sometimes have positive correlation, sometimes have negative correlation. For a few days, gold is like, we cannot realize gold and like look at gold and dollar index, but EUR and GBP is still negative correlation with dollar index. Okay, but if you were to like compare, see, you can do like that, right? You go to DXY. Okay, if you want to compare those are negative or positive correlation, you just USD USD JPY. I will just pick at the same scale. Okay, you can see that. Sometimes they're positive, sometimes they are negative. This is USD JPY, this is dollar index. Okay, these are they are negative. You see here they are still negative. You can see now they are positive, right? Because they are moved the same direction. Okay, they move the same direction, move the same direction, move the same direction, and move from here same direction, and then now they are opposite direction. So it's very hard to say. Okay, so if you want to check whether which one have positive or negative correlation, just click at the button here, and I mean the plus sign here. Okay, then you just compare any pair that you want to see. Okay, maybe I remove. For example, maybe you want to check gold. Okay, maybe we look for gold AUD. Any I will use I see market because I'm used I see market already. Okay, see. Let's just here. Like like since April they have positive correlation, like when gold is move up, dollar also move up. Okay, and this one they have a negative correlation. Okay, these are move up, these are move down, right? You can see that. So if you want to see, you can just do like what I over here, or if you want to change the setting, you can do the light chart or the bar or the candle. It's up to you over here, right? You can see, maybe you look at here, right? They have like this go up, this go down. Okay, this they have a negative correlation, but then after that it's like positive correlation. This like over here, like April, right? April gold is like very like have a positive with the dollar index here. For example, here they move up, they also move up. This is like this is gold is dollar index. Okay, and then after that this sideways, they also sideways, right? This is very clear that they have a negative correlation. Okay. Okay, that's all guys for today. Any pair last one before I end the webinar? Anyone guys? If not, then I think I will end the webinar today. Okay. You see, this is the order block I'm waiting for. Okay, you can see that they really strong move. Why? Because if you trade GBP, right, they come tap to this level, okay, here, and then they continue to uptrend. Okay, all right guys, thank you so much for your time. I will see you again in the next webinars. Okay, thank you for joining. Happy trading guys, take care, bye for now.